Well, a MIC is a mortgage investment corporation. It's designed to allow investors to invest into the mortgage market and receive a higher yield than they would through other bond investments or other competitive investments. It's basically a mutual fund of mortgages where you invest in a series of mortgages as opposed to one specific mortgage. It's also the companies are monitored, and we come under three different government bodies that control mortgage investment corporations. And they're Canada Revenue Agency, FICOM, which is the Financial Institutions Commission in charge of all banks, trust companies, and brokerage houses, and also securities, because you're buying an investment, you have to qualify through securities through one of their exemptions or qualifying as a public company. We qualify under an offering memorandum, which is an exemptions by securities in Canada.
The reason why one would invest in a MIC than, say, just their own private mortgage investment is the fact you're now pooling your dollar. Your $1 is spread over 50 mortgages, or all the mortgages that are held by the MIC. So if one mortgage goes awry, you have the other mortgages still creating income and adjusting for the loss of income in one mortgage.
Well, the benefits of investing in a MIC are stability, security, and it really is a hands-off investment.
It's a slow process of getting rich. Stock market is exciting. It's like going to Vegas. There's no justification on why one day a share is worth $1 and the next day it's worth $1 less. Whereas in mortgages, you know what the face value of your mortgage is, and you know that the interest it earned overnight is due and payable. And that just keeps growing and growing and growing, and that's how wealth is created. It's slow, it's boring, but it's very successful.
Our investors come from a broad spectrum. Some of our investors are just putting money into a fund. They've been referred to us by friends or family. They're not necessarily familiar with what we do or how we do it. They know that it's a mortgage investment, it's secured by real estate. Some of our investors are very, very sophisticated. The funds that we manage actually began with a pool of capital from some very sophisticated investors that were individual private investors themselves at the time. We'd worked with them previously. They didn't want to manage their own funds any longer. Thought that a pool of capital that they'd entrust us to manage would be a hands-off way for them to continue to invest the stuff they've been doing for years. So our investors are very diverse. The minimum investment usually is a $5,000 amount. The largest investment we have is much, much bigger than that. Some people entrust the lion's share of their funds to us. Some people diversify. Although with diversity, there's diversity in our mortgage pools. So we can achieve that for them as well.